I've noticed a lot of people are now retracting the 70% chance we're going to have a recession, and the inflation is going to go through the roof, but it hasn't happened.
Well, that's true, and this is a good example of how, and it's why we put on our initial slide about the bond and stock markets, where we talk about, how financial markets react to stimuli with their reptilian minds. See, the psychology of the markets can shift a little bit. You think it's completely rational and logical and all that, but there can be a very strong psychological aspect to the market. And so what we're seeing now is some of these data points are coming out, CPI, PPI, and retail sales and so forth. And that's hard, real data. Now it's looking back, but not far back. I mean, CPI and PPI released today is from April, so it's pretty recent data. And yet it didn't really help this week a whole lot with the bond yields, because now the focus has shifted from the actual released data, which can move the market, to it's in the yeah but it's a yeah but situation. Like, okay, CPI cooler than normal, PPI cooler than normal, yeah, but we're worried that it's going to get worse because of the current administration. I won't name our president, but we all know who he is, and these crazy tariffs, and it's going to be bad for us all in the future. We just know it's coming, and so we're just going to plan for the worst. And I that can be a little bit frustrating, because you can't ignore the data, and the data just doesn't support yet these doomsday predictions. Now the comeback to that's going to be, well, but the tariffs haven't been fully implemented yet, and we don't even know quite yet what those tariffs are going to be. It's kind of moving around, right? This week's 90-day delay with China in terms of tariffs and so forth. So yeah, that's part of the trickiness of kind of watching the markets, is understanding the psychology and where the pressure points are and what the focus is from week to week and month to month.